Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 6th of December, 2023. So we have welcome, everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll figure out what's up here with my lighting, and I'll be back in a bit. Okay, so now then, I think that's a little bit better. Let me just check my camera here. There we go. I think that's a little bit better as well. Okay, guys, look, sorry for yesterday. Yesterday we didn't have a meeting, a webinar. I had like some training to go through. So, yep, back to business today. So, also before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. So yes, feel free to visit us here, and if you have any questions, you can always reach out to us. So guys, let's look at the charts here. The first one I want to pick up here is Nikkei 225, and looking at good here. I mean, yesterday we saw the US indices rebounding a little bit, not much. Yeah, so okay, just a sec, let me just remove sound here. Okay, look, yesterday we saw a bit of action in the stock market, especially the European one. The US one was a little bit kind of flat-ish, I would say, but nevertheless, we saw NASDAQ gaining, and guess what? If NASDAQ was gaining, that means the which one was the, let's say, lagging the most? And yes, of course, that was the Dow. So kind of they walk around like, and one day one is gaining, the other day the other one is gaining. So yes, look, Nikkei 225, fantastic move here, a fantastic rebound back up yesterday. We are currently holding here. In general, my idea worked out nicely because I said that if we do drop below the 33,200 zone, my next target is the 50-day EMA, which we managed to reach perfectly. That's great. Wonderful. What's next? Well, next basically is this, that keeping an eye on that 33,500 territory. I said to you that if we do push back above it, then yes, great, more buyers here could join in, and we could potentially attract a few, yes, well, actually a few more buyers, yes, for sure. That's when I will aim for the highest point of this year, the current highest point of this year, near the 34,000, just slightly above the 34,000 mark, and then we'll go from there. So, and additionally, to support the upside scenario, I think we could draw this downside line right here, and if that gets broken, then yes, great, more buyers here could join in. So long story short, if we remain above the 33,500 zone, then yes, great, more. I will examine further upside. Certainly, we need to keep an eye on the highest point of November right now, which is around the 33,800 and roughly 70. But again, slightly above that, we do have that psychological 34,000 mark, which could be a nice, good target. China. So with China, there's one thing. Look, China continues to slide. And to be honest, the fact that we saw Moody's, I think, well, let me just double check. Yeah, I think it was Moody. Yeah, Moody's downgraded its outlook on China's government credit rating from stable to negative, basically. So, okay, look, this of course continues to apply pressure on the index, but look, from our side, I was looking at this one from the technical perspective, and so far it's working out nicely, because what I said to you, remember, in the beginning of this week, I said that if we do fall and stay below this 11,557 territory, my next target is the 11,000 kind of 400 zone, and then the lowest point of November of 2022, or in other words, the lowest point of 2022. So good potential target. Again, I'm not saying that this is going to be like, let's say, it could be an exact hit. No, I think it might be just like a maybe like an approach of this area. Again, it could be like an approach of this area almost, and then kind of reversal back up, or maybe it could be like a false breakout here, push lower. So that's why I'm not like rushing into things for now. I'm like I said, yes, I'm aiming lower, aiming to the downside towards that 11,158 zone, and then we'll go from there. Yesterday we got some data from China, and Caixin Services PMI number came out, and that one was better than the forecast and the previous number. So that's way great. However, yeah, not enough. Yesterday we also, by the way, we had the let me jump into Australia. Yesterday we had the ASX 200 news, basically, or should I say the RBA news, or yeah, the what impacted the index. So yesterday we saw a bit of negativity, but I think that yes, the market kind of went for a little correction lower, and look at this. So far, so good, because I would say the fact it didn't really stay above the downside line. Yes, it tested it from above, but then it broke back below it. But I said to you that my downside scenario will be from around here, from around that 7,064 territory and that 50-day EMA. Did we get that break? We got the break, but we failed to stay below it. So that means that, yeah, there is a reversal. We broke back above this downside line, and yep, we're currently examining the 7,174 territory right here. So basically, if you're looking for some further upside, then yes, you still have a very good chance of seeing that happening, because again, as long as we remain above the 7,174 territory, I talked about this level before, then yes, I'll continue targeting the upside. I'm aiming for this territory, which is between the 7,325.33 levels, but roughly. But yes, again, it might come closer to it. Maybe you'll test the 300 level itself in general, and then reverse back down. So kind of aiming for that zone first, and then we'll go from there, guys. Something to also keep an eye on, or should I say not keep an eye on, but like examine, is the GEP numbers from Australia, and those came out a little bit on the mixed side, I would say. So the Q-on-Q Q3 came out lower than the forecast in the previous at plus 0.2, when the forecast in the previous was at plus 0.4. And yep, the year-on-year one came out at plus 2.1, when the forecast was at plus 1.8. So okay, that's a little bit contradicting, a little bit mixed here, but hey, let's take that all in. I think the market did actually take it more as a positive, and yes, we saw that pop. So let's see if we can stay here on the futures above that 7,174 territory. Dow Jones Industrial Average. So Dow Jones Industrial Average, okay, look, we do have some data. I mean, this week, if you remember, in the beginning on Monday, I talked about this week. Basically, it's like a very busy one. So we do have some important stuff coming out today from the US, like the ADP non-farm employment change number, which is currently expected to rise a little bit above the previous. So let's see how it comes out. Again, I repeat myself several times, and I actually repeat this every month whenever we have NFPs as well. So I always repeat that week that, look, don't try to gauge ADP with NFP, because again, they don't always go hand in hand, and actually I would say most of the time they don't go hand in hand. So yeah, so keep your eyes on kind of on that. For now, I mean, if you think that the better numbers, if numbers come out better, then it might, act positively in for the stock market. In a way, yes, but again, at the same time, it might act positively for the US dollar. However, let's dig into all this a little bit more because, look, at the moment, the market now is shifting, or should I say, the Fed more is shifting more towards the idea of possible rate cuts going into next year. So by, let's say, mid-June, I believe that we are expecting at least like 50 basis point cut. So yes, so twice basically from where we are right now. Oh, sorry, from twice the 25 basis points, usual uprises. I mean, usual kind of shifts in interest rates. Now, look, this, like I said, and if that's the case, then maybe the market is taking that into consideration right now, and the market continues to fly high. However, let's not rush into things. Again, I will pick up on this on one of the things I want to tell you later on as well, in my next session probably. But basically, next year is a little bit of a tricky one. So, yeah, I will mention that in my next session. But because I want to go through all these instruments first. So look, at the moment, yes, the market is enjoying the rally. Of course, everybody's mind like is how much more, because this is just, I mean, wow. I mean, if you're trying to short sell it, then yeah, it's a difficult one. Now, again, this is where I will apply the theory which oh, by the way, good morning everyone in the chat room, guys. Everyone, good morning everyone. There we go. So what I wanted to say is, like, look, I'll apply the theory which I don't apply normally, but hey, for the sake of it, the Elliott wave theory, right? So it's kind of goes something like maybe this again. But you see, this is it's not very objective. It's very subjective. It depends on how you draw it, right? So normally you would say, oh, but this is where I need to draw it. But actually, no. Maybe this way, maybe that way. Either way, the point here is to count the amount of waves. So in Elliott theory, you have the idea where you have one big kind of you have like basically three up moves, three strong up moves with two corrections in between, then followed by an kind of an ABC bigger correction. So something like this, maybe like that, and like this. So again, it's a theory. It sometimes works out, sometimes doesn't. So I have to I would like to warn you in a way whenever somebody's talking about this, and like especially when somebody's kind of really talking about it in a for sure way. So because again, on the daily chart, maybe that's the case. On a weekly chart, is that the case? Maybe not. We didn't have our correction. Maybe we'll get this is the first wave still, as you can see. So again, it really depends on where you draw it, how you draw it. I mean, on the 4-hour chart, it doesn't because somebody might say, but hey, this is the first one, this is the correction. Where's the second? Where do you put the end of the second big wave? So nowhere. So that's why I would strongly recommend to be a little bit more careful with the Elliott wave analysis, because again, that's not guaranteed. And also all the harmonic patterns as well. Sometimes they do work out, but sometimes they don't. They do work out very well when it's already post factum, so it's like after the fact. And then yes, you can see, you can draw a beautiful harmonic butterfly or whatever, and you're like, there we go. You see that's what that was. It was that. Anyway, so long story short, for now, what I'm looking at here is I have to redraw the lines here, the arrows. So basically, my downside scenario comes here on a drop below the 36,057 territory, somewhere around here. My upside scenario, as you probably can already understand, will come on a break above the 36,000 36,365 territory. That's the current highest point of December. And if that gets cleared, yes, a forthcoming higher high will be confirmed on the futures. And then we could aim for our all-time high somewhere around here near the 36,832 zone, and then we'll go from there. So jumping into the S&P 500 very quickly as well. So yes, this one's a little bit of a mess, to be honest, and I think I need to redraw this totally. Now I will bring back some of the lines, of course, but I want to have a fresh look because this is just like I said, annoying me a little bit. Now again, something that I have talked about before, when I said that, but I talked about it when we had the opposite, actually, when we had a big down move, a big down candle, and then a gradual decline. And then I said that basically kind of tend to see like a break to the upside on that formation. But in this case, look, we have ourselves a possible kind of rising channel or something like that. So let me just see if that's the case. Yep. So basically we have our big candle here to the upside, then a gradual up move. So now the question is, can we see a break lower? Now, I'm not rushing into things, guys. I still want to kind of be a little more careful on this one. Of course, the all-time highs are very attractive. Let me just jump in this. Yep, the all-time highs are very attractive, which are here. That was reached back in January of 2022. So, okay, look. Somebody might say that we could be forming something like a double top, which is not a bad theory. Not a bad theory, yes, but will we actually do that? So for me, I think that the answer here would be if we do pop and stay above the 4,635 territory, somewhere around here, marked by the current highest point of this year, then yes, I will go to the upside. I will go higher, and then I'll examine that possibility of a double top formation on a bigger picture. So for now, what I'm looking at here is something a little bit more short term. So if you're looking for some lower levels, then I think that maybe a drop somewhere below this territory would be nice, below the 4,545. So in general, the beautiful 45.45 level. If we can get a fall below that, then yes, my next target is the 4,500 area, approximately around there. Let me just grab a line here. So something like this. Now I get it. We could start already looking at some lower levels on the break of this rising channel, which is fine as well, and you can do that as well. Don't get me wrong, but I would say while we remain inside the rising channel, we might still remain in the rising channel, so we might still go higher. So that's like, let's not rush into things. I mean, I get it. Me personally, I'm also very eager to press the short button there, but at the moment, I'm not really getting my signs. Yes, the moment, I mean, unless I start getting some strong clearances here, then yes, I will consider a move towards the, actually not something very low here, but initially towards the 50-day EMA. Or actually the first towards the 4,500 zone and then the 50-day EMA. NASDAQ 100. So this one is, this one is interesting. So it did quietly correct back down. So we did move lower, and we broke below the range here, the box. We broke outside of the box, and that's great. In a way, that worked out nicely. So I talked about this yesterday. I said that, look, if we do break the lower side here, the 15,933 zone, then yes, my next target is the this upside support line drawn from the low of the 26th of October. So we did kind of move towards that area already. So yes, I mean, in a way, mission accomplished. However, what I'm gonna look at right now is the we're back inside the box. We're back inside the box, and that means that not the bulls are really not giving up. And I'm not saying that I'm getting very bullish right now, no, but I can see that the bulls are not giving up. So for me, probably the better option here is to wait for a pop above the 16,174 territory, 73 zone, somewhere around here, the upper side of the box. And then, yes, we could go higher. While we remain inside the box, I will just continue observing the price action. The German index, DAX. So this is spectacular, guys. Mission accomplished. We have reached an all-time high. And let me just double check. This is DAX. This is the future. These are the futures, guys. So basically, the previous all-time high was back in July. So let me just jump into here. Yes, back in July this year. And yep, 16,615. That's fantastic. I mean, we reached the level here. I mean, that is spectacular. That is amazing. My question now is, can we see a retracement? Can we see a retracement? Honestly, this is just, and some of you look might start thinking, oh great, look, this is the end of the fifth wave. Fair enough. I mean, if it's going to work out, it's going to work out. Great. But what I'm looking at here, I'm looking at the possible shooting star here, or you know, so a possible candle which is indicating a reversal, potential reversal. So look, I will say it this way: as long as we remain below the 16,615 territory, yes, I will continue remaining a little bit more skeptical with the upside, at least in the near term, at least towards this upside line. But that's only if we continue to trade below this 16,615 zone. Yes, I mean, just I wanted to double check something, just the DAX chart on the on trading on the official DAX index here. So yes, I mean, you can see this is exactly what I'm talking about. So we did overshoot. We created a new all-time high, and I mean, wow. I mean, I personally, I didn't believe that. I have to admit, I did not believe that we will go for a new all-time high, and we did manage to do that by the end of this year. So what's next? So coming back to my chart here. So what's next? Next is that I'm keeping an eye right now, like I said, on that 16,615 zone on our chart. And that's the all-time high here on my side. And as long as we remain below it, then yes, I'll consider maybe a bit of a move to the downside. This Fibonacci needs to go, or actually maybe if, let's say, if this is the case, then hey, the 23.6 lies perfectly near the near this hurdle, near this territory, near the highest point of September. So beautiful, I would say. And if you're, and to be honest, I think that that's a good area to consider. Let's put this highlighted zone right here. That's the all-time high. I think that, yep, we need to mark that one. And yes, if we break the upside line, I will consider a move lower. I will consider a move towards that was that 23.6, and then we'll go from there. The FTSE 100, let's jump into this one. So we do get the BoE meeting minutes. Let me just double check very quickly. Is that, yep, later on. So just check out the economic calendar for that. But look, from the technical perspective, what's interesting here is that we continue to trade below the 7,535 territory. I talked about this. I mean, we had a few pushes here and there, but in general, we did kind of remain below that. We did remain below that. So the question here for me is, can we get that pop eventually? Can we get that pop? Can we, or should I say, we got the pop? Can we get the body of the daily candle staying above this area? Because at the moment it seems like it is struggling. So let me just I wanted to quickly double check something here. Yes, okay. So yeah, at the moment, yes, it's a tricky one. So look, the meeting minutes, okay. In my personal view, we're not really gonna get something like crazy new or something like that. No, it's more of the market reaction that follows, you know, after after that. So it's that's what we're looking for. And I think, in my opinion, if you're trying to guess where, you know, the market could go, don't. Just look at the market reaction, see what it does, you know, and kind of adjust yourself. You know, you apply your own analysis and see what you can do with that. Probably it's not the FTSE that you would need to be trading, but more probably the British pound. But I'll get to that in a bit. But here, it's, like I said, it's still an interesting situation where we see barrier, which is still working out nicely. So in order for me to go further north, yes, I need to see that push, and I need to see that pop above the 7,535 territory again, and I would need to see the body of the daily candle staying above it in order to go higher. For the downside, well, this is where me is going to take a conservative approach, and I'll wait for a break of the lower side of the rising channel, and then I'll go from there. US dollar index. So there we go. Fantastic. I talked about this, if you remember, at the end of last week. Also, I said this is the theory that I said to you, that whenever we have a big candle to the downside and then followed by a gradual decline, we kind of tend to break higher. Not always. I mean, I do have examples where it's still broke lower, so it kind of was seen as a more of a continuation pattern. But this here in this case, I mean, look, either way, I said that if you want to go higher, a break of that upper side of the falling channel would be needed. And there we go. We got that break. We got that pop, and we got that move towards my downside line drawn from the high of the 1st of November. And this is where I said that if we do break down, my next target is the 200-day EMA tick. Then if we do climb above the 200-day EMA, my next target is the 200, the 50 and the 100-day EMAs, and then we'll go from there. For the downside, this is where a few adjustments have to be made. So let me just get rid of this. So yes, the company phone is ringing. It keeps on beeping here, so apologies for the external noises, guys. So yes, I don't know how to switch it off, but anyway, like, so in just a sec. Okay. Right, okay. Anyway. So, long story short, for now, what I'm looking at here is the, yes, the idea for the downside for me will come on a drop below the 103.07 territory, and then we will go from there. I'm not rushing into things yet. Like I said, for now, I'm kind of cautiously bullish, but the fact that we're still below all my EMAs on my daily chart, that's, of course, is something to keep in mind, because, you know, of further upside, basically, that there could be a problem with that, basically, with a problem with the further upside. So now I need to focus on these EMAs first, and then we'll go from there. Where did my gold disappear? I was supposed to jump into gold. No, that's not the one. There we go. So that's where my gold disappeared. Let's have a look. So, okay, look, gold. What's happening here? A beautiful decline after we reached the all-time high. I talked about gold before, and I will probably repeat what I said, that looking at the monthly chart, there is potential for some further upside. But to be honest, look, I said to you in one of my analysis, I talked about this, and basically, and this is what I've put here in gold, about gold when it exploded to the upside, and I said to you, look, if it falls back below the 2048 zone or 49 zone, somewhere around here, I will consider maybe a bit of a correction here to the downside, a larger correction to the downside. Now, at the moment, it's working out, I would say, beautifully, because look, we're below this hurdle. That's great. My question is, will we stay this week below this territory? Now, if we stay below this on the weekly chart here, if we stay below this hurdle, yes, I am going to be leaning a little bit more towards the downside, guys. So keep your eyes on that, and I would say it's a perfect opportunity maybe to go for a bit of a correction lower here. Some of you might say, but hey, maybe we already did a little bit of a correction here to this one. I would say yes and no, but yes, we did a correction, but is this the upside line to focus on? Well, look, let's not rush into things. For now, I would say this way, that if we do break this steep upside line and we, yes, I mean, then this could open the door even for further declines. But what I'm looking at for now, and this is where I'm going to take a call here and say that as long as we remain below the 2048 zone, I will lean a little bit more towards the downside. If we somehow push back above it and stay above it, then I will have to wait and see, because for me to consider the upside again, a push back above the 2081 zone here is required. And look, this week is a volatile one, so we have ADP, we have ISM numbers coming out. Let me just very quick double check very quickly what's happening on Thursday in the US. Yes, initial and continuous jobless claims. So that's what's coming out on Thursday. But of course, the main event is on Friday, the NFP number. So we'll keep an eye on that one. But today we are keeping a close eye on the ADP number. So again, a dollar mover, and of course, this could have its effect on gold as well. Now, so yeah, that's the game plan here. Today, I don't know, looking at this picture, it seems like the commodity wants to correct back up. So in general, I'm not against that. I would allow it to correct back up, maybe towards that 2050 zone somewhere here. And then, but if it stays below that 2048, I will continue targeting the downside. Look how well this 2009 zone worked out yesterday. That's amazing. That's great. Wonderful. So, and there we go. We're having our rebound. So in a way, everything's in line with my expectations. Silver. So let's jump into silver. Oh, there we go. Look at this strong decline. Boom. Broke the upside line and talked about this. And I mentioned that, and I said to you that, look, if we do fall below that 23.6, below that 25 zone, then yes, this opens the door towards that 38.2 or this 50% retracement on the Fibonacci. So far, so good. Now, at the moment, look, at the moment, I am considering kind of another maybe move towards that 50% retracement on the Fibonacci, to be honest. But maybe after we get a bit of a corrective move back up. But okay, with silver, I would say for me, it's a little bit tricky. So that's the little game plan that I would like to consider here. So if we do push back above, not the 38.2, but back above the 24.57 territory, somewhere around here, yes, a larger correction back up could be possible, but then I'm going to keep an eye on that psychological $25 level, and if that holds, if that provides resistance, then another decline here could be possible. So this is what I will consider. For me to aim for the upside again, a push back above, not only back above this 23.6, but actually also a push above the 25.27 territory right here would be required. Oil. Let's jump into oil. So, so far so good. Look, we've reached my target. One of my targets, the 72.38 zone. So that's great. Now what's next? Well, to be honest, I'm going to lean further south. As long as we remain below the 72.38 zone. If we do drop and stay below, then yes, my next target is the 69.70, and a break of that one could open the door towards that 67 zone right there, and then we'll go from there. So that's my aim, that's my target, and then we'll go from there. So basically, this is the area that I am keeping an eye on. Like I said, it worked out nicely because what I said before, that 73.90, if we violate that one, then my next target is the 72.38. That's great. We reached that. So now my next target is the 69.7 or the 67.04, approximately around here, for the upside on oil. Now this needs to go, no longer needed, but the downside line remains valid. So long story short, if we do break above this downside line, then yes, I will consider a move higher. Now, something that I also wanted to mention and wanted to run by you is the another idea here on oil, where basically I'm considering maybe a range. So look, if this continues to provide support, this 72.38 zone, again, I would expect maybe a rebound back up. And if we do break this downside line, everything would align perfectly, and we could aim for the upper side of the of this kind of potential range idea. At the moment, it's in a theory, but it will work if we do at least push back above the, well, at least rebound and then push back above the 73.90 zone. And then we'll go from there. Just bear with me one moment, guys. My nose is very itchy. Oh, yeah, I had to sneeze a little bit. Apologies for that. Look, natural gas. Natural gas, so far so good. Everything's working out according to the plan. What I said before, that if we do drop and stay below the 2.76 territory, then yes, my next target is the not psychological, but a nice, beautiful 2.6 number. And then the 2.5. That's probably a little bit more psychological than rather than the 2.6. But anyway, so yeah, that's going to be my game plan. And if I'm looking for some higher levels, then certainly at this point, a push back, not only above this hurdle here, which is the highlighted one, but also break back above this downside line. I think the downside line could work a little bit better in that case. Wheat. So just a quick refresh on wheat. Look, I talked about wheat, and basically this one is working out nicely, and it worked out nicely. Mission accomplished, I would say. Team, we're heading home. So what I said that before, that we were in the range, and I said that in order for me to go higher or lower, or to basically consider the next short-term directional move, a break above this territory, above the upper side of the range here, would have been needed, and this is what happened. And then I said that my next target will be this 200-day EMA, which we managed to reach. I would say almost, but that's a good result. That's a great result. So now what's next? Well, to be honest, I'm curious to see what's going to happen here with the 200-day EMA. If it holds, then maybe a bit of a retracement back down here could be possible. If it doesn't hold, then yes, further upside, straightforward basically. So further upside is possible. Now, looking at the downside scenario, I think that the better option here is to wait for a drop back below the upper side of the range here, and then we could consider a move lower. Let's jump into crypto world. Bitcoin, look at this animal. So yes, mission accomplished in a way. The target got reached, the 43,104.5 zone here, approximately around here basically. So it got reached. That's wonderful. Look, what's next? Basically, at the moment, I'm just kind of chilling with the crypto. I mean, look, certainly looking at these highs, and you're thinking, oh, great, you know, we're in December, and this is what kind of tends to happen at the end of the year. We have those rallies. True. Sometimes we don't. So that means not true. Not always we have those rallies, but this year, I think is different. So there we go. We got that pop, and it worked out nicely. So this is one of those examples where I said to you, look, guys, I mean, after we had a strong candle to the upside, then a gradual up move, and this is where the theory did not work. My theory where I said that, you know, we tend to have like a move lower after that. Well, it was seen more of a continuation pattern. So, and actually maybe it was seen more of an ascending triangle pattern right here. And you can see the result, what happened. So we got that pop. So now at this point, I'm curious if this is going to continue rallying, because we have this fella who is also willing to travel higher. And if this fella travels higher more, then maybe we could see a bit of a correction here in the crypto world. So basically, maybe, look, I'll say it this way: if we do drop back and stay below the 43,100 zone somewhere here and stay below it, then yes, I'll consider a larger correction to the downside, and then we'll go from there. But at the moment, I mean, look, if we stay above this territory, then certainly what's stopping it from going towards that 48,000 zone or something like that, you know, and yeah, then we'll take it from there. Bitcoin Cash. So this is where the indication is like that. Okay, we had a nice pop, but is that gonna be sustained? Well, look, we broke this shorter, steeper downside line, but now no longer it's no longer needed. Now we're focusing on this downside line, which is still kind of in play. Now, if we stay below that, then maybe actually we could see lower levels, and we could see maybe a correction back down. Now, I want to draw some upside lines here, but they're all a little bit on the tentative side, I think. Yeah, there we go. Maybe this one actually. That one makes a little bit more sense. So this one's drawn from the low of the 10th of June of this year, and look, if we do break back below it, then this is from where I'm gonna consider a move lower. This whole area in between these two trend lines is a little bit on the neutral side for me, so not really gonna sparkle with me. So, yeah, I mean, that's my game plan for now. As long as we remain above the downside line, then yes, I'll continue targeting the upside. Ethereum. So this one found its good resistance, 2,300. I talked about this level. Boom, I'm very happy, honestly, with this one. And yes, so the inside swing low here of the 24th of February, or should I say is that the lowest point? Yeah, the lowest point of February of last year provided fantastic resistance. And there we go. I mean, I've talked about this. I said that initially after a rebound from this territory, from this 2030 zone, I will aim for that 2,142 tick. And then if that gets cleared, my next target is the 2,300 zone tick as well. So now the question is, can we see a further move north? Well, at the moment, I am going to consider only this scenario. If we, where is that? Where's the highlighted zone? There we go. If we do clear this territory, then yes, I will go. I will go further north, and yes, I will, yeah, consider higher levels. But at the same time, of course, I'm skeptical. My inner me is always skeptical about everything. So as long as we stay below this territory, below this 2,300 zone, then maybe a bit of a corrective move here could be possible. Maybe we could try to apply Fibonacci here from this level to this, and we could this way maybe gauge yes, and we will see how it goes. Lion King 7472003. Wow, I mean, we have a Komu hole in the weekly time frame. Komu hole. That's something new. This is how technical analysis is evolving. Basically, new. First of all, could you repeat? Could you actually tell me which chart are you referring to? Because maybe the comments are lagging a little bit. Yes, I mean, just let me know which one are you referring to, because it's not very clear. So, maybe I've moved on already from that one, but Komu hole pattern. Let me just double check this. I mean, no. This is technical analysis. This is something that's not really the how to say it. Is that what you're referring to? This is okay. This is something that people now try to invent. I mean, new, but actually they're called something else. So yeah. Anyway, could you please be a little bit more specific on that one, so that I could actually know exactly what you're talking about. But I mean, that's an interesting moment here. I mean, something that maybe I didn't know before, but certainly not in the TA books as far as I know. Litecoin, let's jump into that one. Looking at the picture here, I mean, look, it's possibility for an ascending triangle pattern, so that's great. But I will go for higher levels if we do pop above the 76.25 territory, simple as that. And then I'll consider a move towards the towards this 85.36 zone, and then we'll go from there. The Polkadot, there we go. We reached my target, the 5.90 zone. Como hole is between green and red cloud. You mean on the Ichimoku cloud, on the Ichimoku indicator? I mean, that's what you're referring to. And first of all, could you first of all tell me which instrument? That's, yeah, I mean, which instrument? And Como hole is between green and red cloud. You're referring, I'm assuming you're referring to Ichimoku cloud. So yeah, but anyway, but yeah, let me know more, because this is quite interesting. Because like I said, maybe something that I did not know before. So AUDUSD, and in general, I always like, I'm not saying that I know the best or something like that. No, for sure not. For sure not. I don't know the best. I'm here, I'm an analyst, and I do kind of look at the markets from my perspective. I mean, you might take it, you might listen it, you might accept it, might not accept it. That's fine. That's, you know, you're just listening to another opinion in order to build your own opinion. So that's so yeah, look, coming back to the markets here, let's jump into Forex. AUDUSD 0.6595, a 90 zone here. I talked about this and I said that if we do drop and stay below it, then yes, I'll consider a move lower. My next target will be this 200-day EMA, which we got a nice beautiful test off tick. So now if we do drop and stay below that 200-day EMA, my next target will be this 100-day EMAs, and then we'll go from there. So long story short, that's what I'm considering right now. And I'm still targeting the downside as long as we stay below the 0.16595 territory, because then I also have this upside line here, which is something for me to consider. And then yes, we will go from there. So this is the upside line that I'm looking at. And yes, I mean, it aligns perfectly, I think, with the EMAs, the 50 and the 100, or could align, because we're still a little bit higher than this upside line. So maybe by the time when it travels, maybe this will curve back down here. Let's see. AUDNZD. So this is an interesting moment. So we're breaking my lower side of the falling channel. And yes, this is working out nicely. I said to you that if we do drop below the 1.0705 territory, then yes, great, I will go lower. And we broke the lower side of the falling channel, so that means that we can get rid of it and we can just focus on this downside line instead and have it on the chart, and then yeah, we'll go from there. So if you're looking for some higher levels, I think that the best option here is to wait for a push back above the 1.0705 territory right here, and then we could go from there. If we do stay below this territory, then yes, my next target is the 1.0623 level. NZDCHF, beautiful rebound. There we go. Another retest of this broken downside line, and now we are pushing back up. So this is what I talked about. And if we are let's say considering higher levels, then certainly there is a good potential for seeing that happening. And as long as we remain above this downside line, which we broke and we've tested again. So for me, the downside scenario, of course, would come on a break back below it. But so far, the upside scenario is the main one that I'm watching, and I'm aiming once again for my 200-day EMA. US dollar against the Japanese yen. US dollar against the Japanese yen. Look, this upside line continues to provide good resistance, or actually, no, this is where I need to adjust. I think that maybe this is going to be this way. Okay. All right. Got it. Basically, this upside line shifted a little bit. Sometimes that happens, to be honest, guys. So, okay, look, we're back above this upside line, and we're back above this 146.67. So, I think that at this point, the better option here is to wait for a drop below the current lowest point of this week, which is around the 146.23 zone. And if we can get that, then yes, we could go from there. Lion King, okay, don't worry. I try not to worry, but no, you got me interested now. Honestly, which first of all, which instrument, which instrument? Didn't I didn't follow that. And another thing is that, like I said, if it's in between the green and red cloud, I mean, like I said, if you're referring to Ichimoku clouds, then okay. But look, which instrument? I'm okay. Forget about the Como cloud. Which instrument you were referring to? I mean, I'm curious. Maybe I didn't see that one. US dollar against the Japanese yen is an interesting one here. And yes, if we do push and break this downside line drawn from the high of the 14th of November, then yes, I will consider a move a little bit more to the upside. This highlight zone can go, no longer needed, and I can focus on these levels instead. For the downside, yes, a drop below the 146.23 territory is required. USD CAD, something that I will be looking at very, very carefully today. Why? Because we have the interest rate decision from Bank of Canada. Yes. So at the moment, the forecast for down is to come out the same as previous at 5%. So to be honest, we're kind of expecting that, because if the market now is already talking about the idea of rate cuts, basically, so for Bank of Canada to come out and say that, hey, we're going to increase the rates, that's, I think that's a little bit the tricky moment. And look, the currently Canada's inflation is sitting at 3.10. So basically we have the situation which I mentioned on Monday, that where interest rates are higher than inflation. It's only, I think, Australia, which still kind of from the developed countries is still the other way around, where interest rates are below inflation. So now in other countries, interest rates are higher than inflation. So okay, look, what can I say here about USD CAD? For me, again, the market reaction, which is going to be interesting. At the moment, I don't think that yes, something will change from the forecast, so it's just going to remain the same. But certainly, it's going to be quite interesting. Trade balance is also coming out from Canada, so keep your eyes on that. And like I said, yes, for now, looking at this technical picture, what I can see here is that if we do fall back below the 1.3540 zone, somewhere out here, around here, we could also fall back below the 200-day EMA. This may attract more sellers. Then the next target would be the 1.3487. And yes, here we could, if we can clear that area, then great, wonderful. More sellers here could join in, and then we could go from there. So a forthcoming lower low will be confirmed. But at the moment, I mean, for the upside, I think that the better option here is, now previously I talked about this 1.3629 zone, or 30, but I think that we could look at something a little bit earlier. Now, something around here. This is quite an important level. So the 1.3590, 94, 95, something like that, 94, 95. So if we do climb above it, I will consider a move to the upside. US dollar against the Swiss franc. So looking at the picture here, we have also a break of this downside line happens, so that's great. We're currently getting a hold up near this highlighted zone. I talked about this, and I said that if we do push above it, I will go higher. I will consider a move towards this downside line drawn from the high of the 15th of November. So that's something that I'm watching today. Again, remember that we do get some US data coming out, so just be wary of that. For the downside, I think that this downside line needs to go, no longer needed. And I think that what I will do here is I will keep an eye on the current lowest point of this week near the 0.8676. If that gets cleared, the forthcoming lower low will be confirmed. GBPUSD. GBPUSD is okay. Well, yeah, it's okay. It broke my upside line. It moved a little bit lower, but the only thing is that it didn't go further south. So I think that we need to draw. I can see that this hurdle here, that 1.2591, is providing good support. So basically, I would say let's get rid of this, and let's keep an eye on something that I really don't want to draw here, but I don't know. Honestly, I really don't know. I think that maybe it could work out. So it's like a little range here. So this box, if we can clear the lower side of it, then yes, I will go further south towards my EMAs, the 50, the 100, and the 200-day EMA. Yeah, that's going to be my downside scenario. This level needs to be drawn this way, I think. Yep. So this one needs to go, I think. Yeah, there we go. So basically, this is the game plan for me for the downside. For the upside, like I said, I need to see a pop-up of the upper side of the box here, this range, 1.2713, because again, this is the thing. I mean, I hope it's not a range, but I hope it's more of like a scene, like a double top, because again, we have our neckline somewhere around here. We kind of broke it. So yeah, that's the kind of neckline here roughly. So if we remain below that neckline, below this 1.2615, then maybe this idea to the downside could work out nicely. EURCHF continues to slide. Everything's fine. Everything's in line with the idea which I mentioned yesterday. So a drop below the 0.9445 is doing a good job here, and yes, kind of is opening that door towards lower levels, where I said that my next target is the lowest point of 2022, and then we'll go from there. I mean, we're currently also aiming the lowest point, the current lowest point of this year, near the 0.9417, but the lowest point of 2022 is also not far. So also could be a nice good target. Yeah, and with the upside, I mean, at the moment, it's very, very difficult for me to find a good upside, maybe from here. But again, maybe I'll redo this later on. We'll see. And finally, EURUSD, guys. So we're getting a little hold up. We're found good support near my EMAs, near the 50, near the 100 and the 200-day EMAs. So, I mean, mainly near the 50-day EMA, I would say. Look, for me, I said that before, that if we do fall and stay below the 1.0888 zone, my next target is the 1.0825 or this 50-day EMA. Tick, tick. So these levels can go. I think I can leave a few here, but maybe actually this one can go as well. We'll draw something new, but at the moment, if you're looking for some lower levels, then certainly yes, a drop below all my EMAs and a drop below the 1.0756 is required, and then we'll go from there. So yes, we'll go for a larger correction if we do fall and stay below all my EMAs on the daily chart. For the upside, okay, for the upside, it's maybe I could bring back this little hurdle here, the 1.0832, and if we do push back above it, then yes, great, more buyers here could join in. And then we'll go from there. Just a quick glance of what's happening with the treasury notes. They continue to slide. I mean, you don't have to apply technical analysis on this, but so far it's working out nicely. So we're aiming for that 200-day EMA, and look, if we do reach that 200-day EMA, maybe that's when all the indices will kind of slow down a little bit and, you know, reverse back down. Or slow down with the upside. So yeah, that's my game plan, guys. I hope you found this useful. Thank you very much for watching and listening. I really appreciate your time, guys, your views, your rocket ships, your comments, everything. And Lion King 7472003. Thank you very much for the for your comments, but I'll look into this. Actually, I'm curious now. So what is it? But yeah, I'll look into this. So we'll see what kind of pattern that is. But yeah, thank you very much. I hope you all have a beautiful trading day. Stay safe, guys. Most importantly, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. Thank you very much, and bye-bye. See you tomorrow, by the way. Hey there, thank you very much for watching this one till the end. I really appreciate that. So, like this video, we speculate your next mouse movement will be towards the subscribe button.